Today we want to talk about the Iran war and the impact it has to your investment strategy. Again, we know that there's been a lot of volatility, a lot of ups and downs in the stock market since the start of the Iran war. Oil prices have gone through the roof. And again, we're hearing a lot of noise and headlines out there that things could get a lot worse before they get better. And again, today we want to talk about your investment strategy and your investment portfolio. But before we do that, we wanted to again say that our hearts go out to all the families and civilians that have been impacted by this conflict. And as always, our thoughts and prayers are with the U.S. Armed Forces, individuals and their families as well. So again, let's talk about the Iran war and what it means for your investment portfolio. I'm going to share my screen and look at a couple charts and graphs that I always look at. One is called the VIX Index. This is published by SIBO, and it's really a volatility index based on options for the S&P 500. And volatility, it really measures the fear out there. And the higher the VIX Index, the more fear there is in the stock market. And typically when the index goes up, the stock market tends to go in an inverse relationship, tends to go down. And let's look at that graph. Again, over the last 20 years or so, the VIX Index is again showed on the screen. And overall, there's been, a steady line around 20, and below 20, I would say volatility is pretty low. We're stable economic conditions. Things are going, pretty good. And then above 20, again, we have higher elevation, some different market conditions and events. And if we look at that, kind of a walk down memory lane over the last 20 years, we see a lot of notable events that we all recall. So 2008, the Great Recession, look at that of the VIX Index and how it just skyrockets, right? So a lot of uncertainty. And we know that the stock market definitely, decreased during that time. And then September 2011, we see another kind of big increase there, the European debt crisis. And then March 2020, again, the VIX Index skyrockets, the COVID crash, and again, we saw the impacts to the stock market there as well. In 2022, another spike. That was kind of driven based on inflation activity and how it impacted the economy, the stock market, and the debt market and bond market. And then April 2025, we see another spike with Trump's tariffs and Liberation Day and the uncertainty that it caused. And then most recently, March 2026, we saw the Iran war and the impacts, and definitely a significant increase in the volatility index in this VIX index. And again, on February 28th, U.S. and Israeli forces, launched strikes on Iran's leadership and infrastructure. And again, things continue to escalate, and things could get, worse before they get better, definitely. But, looking at this, chart, again, even if things go bad, they do stabilize, right? And so we don't want just a knee-jerk reaction of the world's going to end. Again, as we walk down over the last 20 years, we have seen significant events and a lot of uncertainty. But again, things do normalize, and we always like to say, this shall too pass, right? And so let's talk about what that means for your investment strategy in a little more detail. Well, we all know the adage of, buy low, sell high, right? And so if we think about our house, our investments, we always want to buy low and sell high, right? Great advice. Well, we know that actual investors typically do the other side of that. So there's a cycle of emotional investing. And we see there's kind of 14 different phases of investor emotions over the market. And so we see, there's optimism, excitement, thrill, and euphoria. So things are going really well. And that's typically where we see emotional investors buying into the stock market. But that's, in theory, the worst time to buy, right? We're buying in the highs with all the hype of the stock market, that we don't want to miss out on the next great thing. Things are going up and up and up, and we think they're going to continue to go up forever. That's the thrill, the euphoria. So again, that's how emotional investors think about the stock market and when they're buying. But really, that's the point of maximum risk. We're buying, at all-time highs. And then the other side, the stock market starts to decrease. we get a little more uncertainty. The VIX Index starts to grow and increase. And what happens? Well, emotional investors tend to start to sell then. They hear, panic and fear, and they say, I have to get out of this. I'm going to lose everything, right? The stock market's going to go to zero. And so again, that's when emotional investors are starting to sell, is when that VIX index starts to increase, and we're definitely seeing that now. But we know, again, when do we want to buy? We want to buy, at lows. And so at the lows is actually our maximum opportunity, right? We want to buy low. So again, there's a lot of noise out there. There's a lot of uncertainty out there. And the fear index, that VIX index, has increased. But I want to say, if you're a long-term investor, we want you to stick with your strategy, right? We don't need knee-jerk reactions right now. We don't need to sell everything right now. If you have a strategy, go ahead and stick with that strategy if we're not planning on retiring in the near future. But if you don't have a strategy, well, this is a good reflection point, right? Of, what is our strategy for the highs and the lows, and to manage this emotional roller coaster that's out there. And then also, if you're within 5 years of retirement, we also might want to reflect on that strategy, right? So within 5 years, I want to think about not only, trying to participate in market gains, keep saving and keep investing, but we also want to manage risk as you're getting closer and closer to retirement, or if you are retired. So again, that's how we think about investing. Make certain, again, we're not an emotional investor. We're invested for the long run. And again, although we're seeing some blips on the radar, it shouldn't impact our overall long-term strategy. If you have any questions, we're here for you. And as always, please subscribe to our channel and check out our website with more information. Thank you for your time. And as I always like to say, stay curious and dream big dreams. Take care.